also these synergies work, if the company synergies work, what effect would that have on your valuation?
Well, it will be the company, the market will reward the company, and therefore the price will be higher than we have expected. Because the company will have could have acquisitions in the United States, and therefore further vertically integrate its chains in America.
That would change your recommendation?
Yes.
You change to a buy?
Yes.
I want to hear much more about the policy of the communications. You said that you're waiting for a target price of 51.37. This means an upside of 10.95. This is almost twice the current interest rate in Mexico. So that's not enough to think that this is a buy opportunity. I mean, this is once again almost twice the interest rates in Mexico. So what is the policy of recommendation that you use to say hold instead of buy?
We were basing our recommendation on the CFA's policies, on the sense that if any given stock is 15% of its trading price, it would be a buy. And Mexican, as we already said, is less than 15%. It is around 10%. So our recommendation is a hold.
Congratulations for the presentation. Why do you believe that the recent European acquisition will not contribute to the profitability of the company? And why do you say that the Pajaritos Pemex project are discounted in the price?
Well, for the European acquisition, first of all, it is at the price that Mexican is negotiating to acquire it at 8.5 euros a share. We believe it is trading at a discounted price. We made a few, we made a little bit of research, and we found out that an ING analyst in Netherlands said that the real value of the company is at around 10 euros a share. But also, moreover, it would be a great opportunity for Mexican to start entering the petrochemical market in Europe. However, we don't see that it will bring results in the short term, more in the mid and long term.
Regarding the joint venture question, we think that as this information is public, the market has already discounted the positive outlook this joint venture means. Although we have incorporated in our valuation model the expected cost reduction and revenue increase resulting from this venture.
Well, you presented both the multiple analysis and the comparison with other companies, and from that information at the end you struck nothing because you said that the only reliable method is DCF. So my question is, why did you did this valuation if you didn't believe in them? And why the market or the professional analysis in the market do this analysis and it's sometimes reliable?
Okay, answer to your first question. We do believe in the DCF method because, as we already said, it best incorporates different risks, variables, and other assumptions, and it reflects the aggregate of these assumptions in the target price. We do not believe in, or we do not use the EV/EBITDA multiple, since, as we said, it has a huge premium over the market and over its closest competitor. So we trusted on our DCF model, and therefore we incorporated at 100% the terminal value of our model in our target price. However, we see the EV/EBITDA multiple as a guidance or a perspective from where to see the Mexican stock.
Okay, I'm gonna rephrase the question. So, what I can understand here is that we will always see, or at least in the short term, the Mexican multiples above the average and above the peers. And if that's so, why is that?
Well, we think the EV/EBITDA multiple is biased by the outstanding results delivered by Mexichem in the past and the high growth potential identified in the company. However, we think those assumptions are already incorporated in Mexichem's current stock price, current trading stock price.
So, this is the fair multiple for Mexichem, the fair long-term multiple for Mexichem to trade more than 8 times enterprise value EBITDA. This will be the future for the company, the future multiple, in comparison with the market that is around 7 times. What I'm trying to ask here is that if this situation that the company has of being priced better by the market in a comparison has any fundamental behind, or the assumption to disregard this information and to say, well, this is going. The assumption behind this is that this is going to be the future, and this is what it is. But I want to hear from you the reason why the company has a higher multiple and why this multiple is going to be sustained in the future in order to disregard the multiple analysis method in the valuation of the company.
Okay. We do not think that this multiple will sustain in the future. We think that the company will miss its 2020 strategy in yearly, or in other words, we don't think the company will success with the 2020 strategy consistently every year from 2011 to 2015 or 16. Therefore, I think its multiple will descend towards a more normalized multiple in comparison with its peers.
Okay, and if that's so, why the percentage or the weighted percentage for the valuation of the company with the multiple analysis is 0? If you do believe that at the end the multiple will go down.
Yes. We did a research grounded on the CFA politics. There is no grounds that say that a proper analysis should be given or should be weighted in a percentage of DCF and another to multiples. So that's why we relied entirely to our DCF analysis or method and just used our multiples analysis as a guidance.
You mentioned that you use 85% of the revenues in order to forecast the performance of the following years. Can you explain if you foresee important differences in the 3 main markets of the company in terms of the performance in each of these countries, or important differences inside the industries, or in which country are you forecasting a most important impact, negative impact, if is the case?
We did a weighted average for the industries by its sales. I mean, like the main countries that have the 85% of sales in Mexican are Mexico, Colombia, Brazil, Japan, the UK, and the UK. And for this, we did like their sales, and then the expected growth in each industry, and ponderated to each of their chains. I mean, for fluorine, it is only sold in the UK and Japan, so we give like 50% each. And for chloramphenyl, it's like only for Colombia and
5
Mexico.
minutes to go.
And so for this, we incorporated the growth of every every industry, in which would be the construction industry, the consumer industry, and the industrial industry for each chain and for each country that represents more of each chain. And for this, we use the weighted average and then added the premium to forecast the terminal value.
But do you foresee a more important impact in some of these countries that is relevant in order to be not so optimistic in that country especially?
The main Mexican market is Latin America, and we have a positive outlook for this region, especially in the integral solution and fluorine vinyl chains. We think the fluorine chain will expand significantly and will be more important in terms of revenue and EBITDA in the coming years. But what we see as a difficulty is an expansion to new markets such as Asia or Europe.
Is there any risk in the hedging activity of this company? Is there any risk in the hedging activity? Could the hedges go against them? I mean, they're hedging, dollars versus euros.
Yeah.
Could
Yes.
go the other way around.
Yes, as we can see in the graphic of the monetary loss position in the risks, in the 2008 fourth quarter, they had a major position loss due to, as Comercial Mexicana or other companies, same case. And for this case, it will also be a risk for them. It will also go the other way around if they are not.
Is that a big risk?
Well, actually, it is not that a big risk because they are not really that much leveraged. Yeah.
Another question. Next year we will have president election here in Mexico. Everybody knows this, but I don't know if you know that around the globe there will be more than 20 president's elections. And the statistics show us that in these periods the spending in the construction sectors grow. Do you consider this on your estimates, and how do you comment about this one?
We have considered important growth construction programs in Mexico, Brazil, and Colombia that are Mexicans' most important markets in the integral solutions chains that participates in the construction industry. We have considered housing programs in Mexico that will be very important, as well as in Colombia. And for Brazil, we have considered the infrastructure construction for the Olympic Games and FIFA World Cup in the coming years.
No more questions?
No, sí, gracias. No, bueno, pero es muy larga, entonces voy a hacer la corta. Bueno, I'm going to stick to my subject. Why do you think that professional analysis do rely in multiple analysis, at least in some point? Why the market do these methods?
Well, I think it is, analysts do this kind of analysis in order for the reports to be more balanced. But in this case in particular, we saw such an overvalue in Mexican stock that we prefer to be more realistic or conservative towards our target price. Otherwise, our target price would be inflated because of the EV/EBITDA multiple.
Moreover, it is a method that it is easy to compare with its peers, and for Mexican there is no direct competitor. There are only close competitors depending on the chain. That is another reason why we didn't incorporate another issue.
There is not a company worldwide that matches Mexican in size, in age, in geographic positioning, in industries. So that's another reason for not relying or considering multiples in our target price.
Okay, time's out.